All right, welcome everyone. I'm happy to introduce the CEO of StrongPoint, Jacob Tveraabak.
Thank you, and good morning. I'd like to present to you StrongPoint, a retail technology company out of Norway. Very exciting. We are a retail technology company based out of Norway, about 1 billion kroner in revenues. We are listed on the Oslo Stock Exchange and had 1.3 billion NOK market cap as of last night, actually 1.4 today, so it's certainly going in the right direction. We have offices in Norway, Sweden, the 3 Baltic countries, 400 employees working on a number of solutions that we are selling predominantly to grocery retailers. And we are selling our solutions and have implemented our solutions in more than 15 countries, and in particular lately, the e-commerce solutions that I will be talking more about. I wanted to talk just a little bit about the portfolio shift that StrongPoint has been doing over the last 3 years. For Norwegian investors, StrongPoint 3 years ago was mostly associated as being PSI or Pinnos System International, the name of the founder. The company had cash management solutions, cash security, labels business. We were a little bit like a mini conglomerate, pushing and selling hardware products. Now, 3 years later, we are a pure retail technology company. We're selling solutions, software solutions, to companies virtually everywhere in Europe and in North America. And I want to deep dive a little bit more into e-commerce, where we're getting a lot of traction now. Put very, very simply, what does StrongPoint do? Well, we provide grocery retailers with the best technology solutions there are to drive the efficiency and store experience, both in store and within e-commerce. And it almost goes without saying that with the pandemic, e-commerce in groceries have really skyrocketed. This is the last retail vertical that have been really growing in e-commerce, and we're seeing that happening now also in grocery retail. So why are we so obsessed with e-commerce? It really boils down to the fact that e-commerce growth in general, but in particular in grocery, drives 2 opportunities for StrongPoint. Number 1, our grocery retail clients are seeing that more and more of the sales are going outside the stores directly to customers through e-commerce. All other things equal, that creates a margin pressure in the stores, and that's exactly what we're seeing now as retailers are struggling to keep growth compared to last year. So there's a need to drive efficiency in the stores, and technology is a vital part of that solution. Number 2, believe it or not, but there are still many retailers that have yet to embark on the e-commerce journey. And those that have are really working hard to see the efficiencies and the profitability come out. And we are providing the best e-commerce solutions there are in the market to these customers. I say we focus on grocery retail. There are spillover effects to other retail verticals, but grocery retail is a very, very tough market to work with, and that's in our favor. We have the solutions to serve the grocery retailers that are working with big volumes and slim margins. And you see a number of the customers that we have here growing by the day. For those of you that are not that familiar with StrongPoint, I will just very briefly talk about what does our retail technology solution portfolio looks like. So if you take the roof of the grocery store, then you see some of the solutions that we offer here. Self-checkout solutions, for instance, that are fully developed by StrongPoint. Electronic shelf labels, Vensafe to ensure a proper handing out of tobacco. We're providing workforce and task management tools to ensure that the stores get the appropriate manning in place. and cash management solutions in the areas where there's still cash to be handled. We're also going into robotics. We have been investing in and are implementing robotized solution with the Halodi robotics, and we're expecting and hoping to see humanoid robots on the lab type of environment very soon. We're also using the stores or utilizing the stores with our customers to ensure that they're getting the best out of those stores for e-commerce. So there's still a lot of, and will be a lot of, picking of groceries in the stores. And you will also be using the stores for handout, whether it's by drive-through or click and collect lockers as shown here. Our e-commerce portfolio can be summarized very simply by saying that from an order is received online until it's been picked, consolidated, delivered, etc. to customer, we provide the entire solution. So we have picking solutions that we offer in store and in dark stores. And we have a range of last mile solutions, click and collect, drive-through, home deliveries, and pick up in store solutions. And not least, the full end-to-end solution to keep track of where the orders are at all times. Still exploring what to do with the automated solutions, but automated solution is definitely an area in which there is a lot of interest from our customers. So take one step back and what is sort of the ambition of StrongPoint? What is the financial ambition of StrongPoint? And this is the ambition that we set out in the early 2020, actually pre-pandemic. And we're still standing behind this, re-emphasizing the 2.5 billion kroner turnover and an EBITDA margin of 13 to 15%. So it's coming from about 1 billion and about 8% EBITDA margin. So how will we get there? Well, we like to talk about our T-shaped strategy. So the stem of the T being the countries in which we are serving today: Norway, Sweden, the Baltics, and Spain. And we're expecting those countries to continue growing with more and more solutions being added. For instance, we have lots of white space in the self-checkout area in Norway and in Sweden and Spain for that matter. We have lots of white space in e-commerce in Norway. We have lots of white space in Sweden when it comes to Pricer or when it comes to workforce management tools. So lots of white space in the stem of the T, and we have, with the successful divestments of labels and cash security, also funds available for M&A, where we're looking to expand geographically where we have a good product market fit. Top of the T, those are solutions that we believe have world-class potential. E-commerce, our self-checkout solution, and cash management in the areas where that is relevant, namely the Mediterranean countries surrounding Spain. But I will be double-clicking on e-commerce, where we are expecting most of the growth towards 2025 to come from. And to illustrate this, just showing here what is this picking solution all about. And I think in that respect, it is very important to remember that we are a Nordic-based company, in general high salaries, also for low-cost labor. It really doesn't exist, which means that our solutions need to be super efficient. So when we say we're hyper efficient in store picking, we are. We're achieving 240 items pick on our top quartile customers, where the benchmark is 60 to 90. That's correct, 240 versus 60 to 90 as the benchmark. We're using this in stores and in dark stores, and it's very neatly compatible with automation solutions. So this is the solution also going forward for grocery retailers with automation. And just to shed a little bit of light on how this solution is being appreciated, some 6 months ago, we announced a partnership with Glovo. Glovo is one of Europe's biggest delivery platforms, present in more than 20 countries, and a tech unicorn like Glovo, choosing StrongPoint's picking solution, we really take as a testimony that this solution is best in class. We're already working through Glovo with Carrefour in Spain, and just actually right now, we're also working with Auchan, first now in Ukraine. So things are progressing also with Glovo, which we're very pleased to see. Lastly, we feel, of course, that we have been sitting on a gem, or maybe a hidden gem. We are seeing that with the likes of Glovo choosing StrongPoint solution, we're also getting the attention in the media or in the relevant media that we believe, of course, that we deserve. Whether it's with the Grocery Dive, Financial Times, Forbes magazine, it's getting there, and that is making us very both proud, but also optimistic about the future. So to boil things down to what does the roadmap look like going forward? We have 3 things on our agenda. Number 1 is really ensuring that we're capitalizing on the e-commerce opportunity and market that exists. It's going to grow, and it's only going to grow. Anybody says anything different will be wrong. This is like the internet in the 90s. It's not disappearing. It might be a blip or a dip in a few months' time, but this is growing. This is a mega trend. So providing the convenience and the cost efficiency on grocery e-commerce is top priority. We know we have the solutions, and we're ready to bring it to our customers and new customers. Number 2, this is also the opportunity following a pandemic where grocery retailers have really been making headlines with their both top line and bottom line growth. The need to make the stores more efficient is bigger now than ever, and we have the solutions and growing the solutions to make that happen. And lastly, M&A. We have divested the non-core businesses of labels and cash security, and we are committed to making those funds being reinvested into what we are really all about, namely retail technology. So with that, thank you for the short presentation of StrongPoint.
Thanks a lot. Very interesting. Definitely seems like you're riding a mega wave. It's very, very interesting. So I have a couple of questions, and I think maybe we could start on if you look in your existing markets, you're talking about a lot of white spaces, opportunities for you guys in existing markets. Is there any way to kind of quantify, if you look at a country like Norway, how many of the stores of a certain size in Norway are kind of fully up and running with these modern types of solutions, and just to kind of understand how much room there is left to grow, for instance, in Norway or other more modern countries?
Okay, so let's use Norway as an example, right? And this is very much country dependent.
Yeah.
But if you're looking at Norway, Norway is one of the highest penetrated countries when it comes to ESL or electronic shelf labels. That doesn't mean that things are stopping. I mean, we have just this year announced 2 very big ESL wins with Norgesgruppen and Coop. They will be rolling out for the next quarters or even years. Cash guard, believe it or not, but cash guard or cash management solutions are also there to stay for another few years. So again, I'm just saying that those are pretty penetrated market, but there are still sales to be done. But if you really look at the white space, I mean, the self-checkout area is really a white space. The few self-checkouts you see are not StrongPoint solutions. We believe we have a much more advanced solution, and a solution to both ensure age verification on age-restricted items, as well as fruit and vegetables identification, meaning you won't be needing to press through all the buttons to find the right
Nice.
fruit and vegetables. So we know we have solutions that are really sought for out in the market. And then, of course, when we talk about Norway, I mean, the online penetration is extremely low, and the major grocery retailers really haven't embarked on that yet, maybe with the exception of Meny. So there's lots of white space already in a country like Norway, and you'd find similar situations elsewhere.
Yeah. All right. That's helpful. Thank you. Next question on kind of the M&A pipeline, or part of the strategy that you talked about, what are typically the kind of areas where you see that you want to do M&A? Do you have like special areas where you find that you have a hole in your kind of offering where you want to fill that up, or yeah, how do you go about that?
So we're really looking at M&A through three lenses. One of them being, where do we see a product market fit that really has come across now, maybe in particular with the pandemic. And we've stated that Denmark is interesting, Finland is interesting, the UK is interesting. We're scanning those markets. Number two, we're also constantly exploring what do we need to do to continuously evolve our technology platform where we're not investing ourselves. And number three, there will always be pockets of areas where we can improve the presence we have in the markets we are at. Right now, it's maybe potentially mostly so evident in Spain. Although with a new management team in place there, we are really focusing on making sure we have things under full control before expanding the operations. But that's in simple terms is how we're thinking about M&A.
Yeah. All right. Thanks a lot. And then on your financial targets, so in terms of the profitability, you have, you know, decent targets for the medium term, if I can refer to it as that. Can you say anything about like the profitability in the different geographies? What's kind of the level in the more mature geographies compared to the less mature geographies? Can we get some hints from there, or?
Well, I think we normally don't disclose that, but I think, or I know what we've said in the past, that when we do get to a material size in a country, the scale or the leverage of existing people is causing nice profitability. So that means when we are adding on new solutions in Norway, in Sweden, in the Baltics, and parts of Spain, we're doing that very efficiently. So as long as we get to sort of a material size in a country, it's very nice profitability. And beyond sort of geographies, we're also seeing that obviously with some of the solutions being in high demand, such as our e-commerce solutions, we're attracting and achieving the profitability levels that you would expect from a software type of business.
All right. What would be kind of the most typical competitor that you meet? Let's take Norway, for instance, as you mentioned that a lot of the things we see in the stores are not yours. And then it would be great to learn more about who you're meeting in Europe as well.
So I wish the answer was easy and just say this is the one competitor. Rather, the answer is threefold. One is, to some extent, it's internal. So, for instance, not as prevalent in Norway, but the reason why why a company would or a retailer would invest in electronic shelf labels, the competitor is really the paper labels.
Yeah.
So internal competition, if you may call it like that, is one. Number two is that traditionally the POS providers have been controlling to a large extent sort of the integrations needed to be done on some solutions. That is a type of competitor we're seeing diminishing in importance. And the last one, obviously, being for specific solutions, there are some competitors. So if we use electronic shelf labels as an example, I mean, you have the Pricer, which we are obviously selling, but you also have Sessi, Magotag, Hancho, Solum, other specialized companies in exactly that one solution.
Yeah. But isn't there like a huge upside for some of your customers to get a lot of the kind of the full suite from one company, or?
That's what we're seeing. I mean, so we're almost been surprised to see that, looking for that StrongPoint lookalike in other countries, that would be our ideal M&A candidate. We haven't really found that in the markets where we see the potential being best for our solutions. So we believe there's still ample opportunity to create that StrongPoint solution that we've seen in other countries, also in the countries mentioned that we're looking through M&A.
Yeah. You kind of mentioned the word there earlier on that there's been a boom in retail, top lines and bottom lines, but there might be a dip now, right? We're going to spend our money otherwise going forward when we're out traveling again. I don't know. Should we be afraid of a dip in your business as well, in kind of the very near term before it kind of accelerates again, or?
I'd say on the contrary. I mean, this is perfect for a StrongPoint. Our customers typically have ample capital to invest in the stores to make sure that the stores become a asset, not a liability.
Yeah.
It's very important. So the stores need to be an asset, not a liability, whilst investing in e-commerce. If you're sitting there or not acting, you're risking most of the growth to go into pure player e-commerce players, which means your stores will be liability. So, these grocery retailers are smart companies, smart executives. They see exactly that picture, and so I would say the expected dip is almost like an advantage. There will need to be investments in stores, and in e-commerce, it's becoming more and more evident for everybody that you need to do something there. And I guess you could say in that respect, out of Norway, Oda is our best friend. I mean, going into Finland and Germany, as has been stated, is giving a real push to the existing or established players to do something in e-commerce. And obviously, we have word to say about how to fend off that competition.
Yeah. Okay, that's very good. I know we're over time, but just one very quick one. So your 2.5 billion revenue target, from here to there, you envision like a linear thing, or is it like a bit slow and then suddenly some M&A, or how should we kind of think about that?
So if you're looking at how we will be growing our business organically, most of that will come from e-commerce. So it'll be coming from e-commerce in the existing markets we are, but not least new geographies. There's also the other solutions, self-checkout maybe in particular, where we're expecting growth to come. And then lastly, we have in a way sort of substituted the non-core assets of labels and cash security, which have enabled us to be debt-free and have ample cash in the bank, so to speak, to be ready for M&A activities. So that will be part of the growth to 2025, 2.5 billion.
Super. Thank you very much. Sounds very exciting. Thank you also to the people that have been listening in, and good luck.